Hey everybody, welcome in. Thanks for tuning in today. My name is Jake Hoskins. Today I have a really interesting episode for you. It's about Bitcoin. So I'm going to call this episode Bitcoin Heads or Tails. So it's a pretty good title, right? So when I say Bitcoin Heads or Tails, I'm going to be talking about kind of the sides that investors and speculative people come down on. So this is sort of from a financial perspective. There's kind of this spectrum of people and opinions on Bitcoin of basically, it's worthless all the way up to this is the best invention of the century. And so I'm going to give you a little bit of that. And first of all, I'm going to give you some background about what the heck Bitcoin actually is, because most people have no idea what it is. They hear about it constantly on TV, Bitcoin this, Bitcoin that, but they don't know exactly what Bitcoin actually is, and I think most people don't. So first of all, Bitcoin is an extremely complicated subject, and it is worked on daily by PhD computer scientists, by extremely smart physicists and mathematicians. So I'm going to do the best I can trying to explain this to you and kind of give you an overview of what it is so you can make a little more of an informed decision. So first of all, Bitcoin is all digital. So fully digital currency. And so that means that there's no physical Bitcoins. And this is kind of a misconception among a lot of people. When people think of Bitcoin, they think of this little gold coin with the little B dollar sign on it. And that's actually not the case. There's no physical Bitcoins. So if somebody comes up to you and hands you a Bitcoin to pay for something, don't take it. It's probably not real. Bite on it. It's probably chocolate or something. But anyway, there's no physical Bitcoins like there is dollars, paper money, and coins. There's none of that. And so kind of an interesting part about that is that Bitcoins can't be destroyed. They can be created up to a certain point, and I'll get to that here in a little bit. But you can't destroy Bitcoins. With United States dollars and other paper currencies, you can flush them down the toilet, you can burn them, do whatever, and they'll be destroyed, and you can lose them. So with Bitcoin, really interesting because it's 100% fully digital, and more or less they're just kind of pieces of computer code, like collections of transactions that sort of constitute the Bitcoin more or less. So then the second thing about Bitcoin, it's what's called a cryptocurrency. So cryptocurrency seems to be the buzzword of the century. And so let's kind of break down what it actually means. So I'll start with currency here. Obviously, we know what currency is. It's a medium of exchange, a unit of account kind of thing, where we can trade it back and forth for different goods and services. And so currencies exist so we don't have to barter. So you don't have to go up to somebody where you want to buy a boat and say, I'll give you 4 goats for that boat. So you don't have to do that because that's a really inexact science, and it's not standardized. So we don't want to have any of this goat boat trading business. We want to have something that's really easy and to trade and to carry around. So the second part of this is crypto, and crypto is kind of the root word for encryption. So when something is encrypted, you want to send a message to someone, in the presence of adversaries, so to speak, so that your enemy can't intercept the message and read it. So it's encrypted by the sender, sent safely and securely. The receiver gets it, decrypts it, and so that they can read it. So that's a really secure way to send messages, make transactions, and do other kind of stuff. So this part really kind of helps make Bitcoin pretty secure in its transactions. So the next part about Bitcoin is a really big selling point for Bitcoin for some people. It's the fact that it's decentralized. So when I say decentralized, I mean there's no regulating agency that watches over the Bitcoins and makes the rules about how the Bitcoins are traded and produced and all that stuff. So there's no regulators to it. Whereas in contrast, the United States dollars that we have a central bank, which is called the Federal Reserve. And so the Federal Reserve has full control over the currency of when to print money. They have these big printers in Washington, D.C., where they just churn out paper money whenever they want. And they can make a lot of other decisions on the U.S. dollar and the money supply. With Bitcoin, there's none of that. There's no choke point there where you have one person or one organization overseeing everything. And so that's a big selling point to some people, because people don't like when the Federal Reserve or any other kind of central agency makes decisions on their currency. So people don't like if you may raise interest rates or you may print more money, which printing money leads to inflation. And so with Bitcoin being decentralized, excuse me, you wouldn't really, you wouldn't have all this money printing and all this sort of flawed fiscal and monetary policy that you see with the Federal Reserve sometimes. So that's, again, a big selling point to some people. Another interesting thing about Bitcoin is that there's a limited supply of it. Limited supply, there's a finite number of Bitcoins. Right now, as I'm talking, there's like about 17 or 18 million Bitcoins that exist in the world. And so according to the literature, there's going to be 21 million, and then it's going to stop at 21 million. So this sort of leads to the weird concept known as mining. When I say that mining, meaning you have to go mine a digital currency, that's where I lose some people. When you mine a Bitcoin, you're not taking your pickaxe down to the mine and chipping away. You are essentially writing a computer algorithm that can solve a problem, and it's not like a riddle, but it's like you have to solve this program, and if you're successful, you receive a block of Bitcoins, which is, I think, 12 Bitcoins right now. And so that's how a Bitcoin comes into existence, is through mining. And again, that's just a super weird concept. So I'm going to link a lot of literature and stuff down below in the description, so that you can kind of read and get a better handle on this and all this stuff. So when you talk about having a limited supply, that's really intriguing when you're talking about a potentially viable currency, because unlike the dollar, there's only going to be 21 million Bitcoins ever. And if you can sort of accumulate your share of that, that could potentially make you really powerful or rich, potentially. And so that's another interesting part of the limited size factor. And so the last thing I'll mention about Bitcoin here is it runs on something called blockchain. Blockchain is the underlying technology that makes Bitcoin and other cryptocurrencies so effective and so interesting as a technology as a whole. So when I say blockchain, this is a manifestation of triple entry accounting. Right now, in the United States and in the world, our corporations and business people do double entry accounting where, you have a debit and a credit. So I'll give you an example here. If there's a transaction that happens between, let's say, Bob and Alice, and they exchange $100, they're going to do a double entry accounting ledger. So it's going to look sort of something like that, where you have a debit and a credit, and the other person, Alice, is going to have the inverse of this. So they each have what's called a ledger. An accounting book where you just keep a list of your transactions. And each of these people has one, and each of their entries leads back to the other person with the amount here. Now, the problem with this is that a number can be off. So if this happens, we have to kind of have a dispute here between Bob and Alice of whose number is right and whose number is wrong, and how was the mistake actually made. Was it fraud, or was it just a honest mistake? This happens, so Alice is over here. And she has her transaction history as well. So they both have their double entry, entry from each party. What triple entry does and what blockchain does is creates a digital verified receipt. This receipt is created and it's time stamped and verified with e-signatures from Bob and Alice, where they're using public and private key encryption and decryption. You can look that up. I won't go into that. But so their verifications are on there with a timestamp and all the details of the transaction. This receipt is put into the blockchain, and if more transactions happen, you start adding more blocks on the chain. Like that right there. So you have this transaction history where it's basically a third-party receipt, I guess you could think of, and this is verified, and you have this proof of work concept here with this like third-party receipt. So this is the third entry of accounting, and that's what makes blockchain so special. So people like blockchain and like the idea of Bitcoin because like I said, you have that proof of work verification. So when there's something going on, transactions, maybe votes in an election, something like that, where things are being counted and recorded, it's nice to have something that's decentralized, that can be verified and is really secure and accurate. And so this system is really good, especially for trading financial transactions. Now let's get into kind of the two different perspectives on Bitcoin. I'm going to divide this into two sides here, where we have the minimalists on one side and the Bitcoin maximalists on the other, and I'll explain what that means. On the minimalist side, they're going to be against Bitcoin. Basically, maximalist is going to be for Bitcoin. So I'll give you the underlying philosophies here in a second, but the price targets on each of these people as to say, like, you know, what they think the price of Bitcoin, of a single Bitcoin, is going to be in the future is a pretty big range, and both have some merit. So on this side, the lowest Bitcoin can go, obviously, is 0. I've heard some outrageous price targets on this side, and you can see how they would go there, but I've heard up to $1 million per Bitcoin for a price target. That's kind of an abstract number, but you know, you see the hope here, and the potential of what some really smart people think, a single Bitcoin going to $1 million potentially, and odds are it's going to be probably somewhere in between this. So the philosophy of the minimalists is that Bitcoin is a speculation, it's a bubble, it is worthless, you can't trade it for anything, or at least it's not widely accepted right now. And so, you know, and it doesn't produce any cash flow for you, you can't do anything with it. And so from that perspective, they say this is completely worthless and there's absolutely no reason why you should own Bitcoin at all. For that reason, they think Bitcoin is just going to go to 0. There's no reason to own Bitcoin whatsoever. On this side, they believe in the blockchain technology. They think that Bitcoin is a really secure way to transfer money and to verify transactions that have happened. And because they believe in the underlying technology, they think it's going to eventually have a path to being a viable, you know, widely accepted currency. And if that's the case, and there's only going to be 21 million Bitcoins, eventually the price is just going to get pushed up and up and up, higher and higher and higher. These are the two sides, kind of the two polar ends of the spectrum of Bitcoin opinion. And odds are most people are going to be somewhere in between. I personally am kind of in between here, where my thought is, you know, okay, this has potential, but it hasn't been, you know, proven yet, and it is speculative. So my thought is, you know, take 1% or 2% of your money, put it in Bitcoin, and just close your eyes and cross your fingers, you know. And something really good happens like this, you've got a huge reward, but also realizing that this is a possibility. But, you know, my thought is if you lose 1 or 2% of your money, big deal, oh well, you tried. So that's sort of where I come down on this. But let me make this very clear. This is your money that we're talking about. It's your hard-earned money. So you ultimately have to be educated about this, and you have to make the decision with the consultation of your financial advisor. So before you run out and use your hard-earned money to buy Bitcoin, really think about what you want to do here and your individual financial needs. Don't just feel rushed to, you know, go buy some Bitcoins because everybody else in your office is buying Bitcoins, and, you know, you don't want to be the last one in the hot tub, so to speak. So just make your own decisions. Be smart about this. Don't risk everything. And keep in mind that Bitcoin is extremely volatile. So it has some big spikes. It goes up, goes down a lot. So keep that in mind and just, again, make your own decisions. Be smart about this because this is your money we're talking about. So I really appreciate you watching this video. If you learned something from this, leave it in the comments below and let me know where you come down on this spectrum, whether you're a Bitcoin hater or a Bitcoin believer. Let me know in the comments section, and go ahead and click the thumbs up button and click subscribe if you haven't already, and that really just helps me out a lot. So until next time, I'll see you later.